Okay, good morning. I believe you can hear me. So, a very quick one. Let's begin today very fast while we finish early. Now, today we are going to look at government revenue and expenditure. In fact, in most of the question will ask you to prepare statement of financial performance. The question will never ask you to prepare government revenue and expenditure, but that is what literally the question is requiring from you. Anytime you are given a trial balance, they would tell you to prepare a statement of financial performance and then statement of financial position. So for the public sector, once you hear the statement of financial performance, just like as you know for P&L in private sector accounting or the income statement, they will tell you to prepare a statement of financial performance for the public sector. And here, what the examiner seeks to achieve is that they are going to test your knowledge of how you know the classification, how government revenue is classified. The gift mix classification of government expenditure. The Controller and Accountant General 2019 chart of account. So I'm sharing a screen. This screen we are seeing was downloaded from the website of the Controller and Accountant General, and it seeks to explain how the statement of financial performance will look like, or the government revenue and expenditure. So if you could recall some of the things we did under the theoretical aspects, we look at tax revenue. Under tax revenue, sub-classification are direct and then indirect tax. So one of the examples of direct tax are taxes on income and property, as you can see here. So all these, in fact, some of the items you are seeing here, personal income tax, PAYE, self-employed companies, these are the items you see in the trial balance. So all what they seek to know from you that in your workings or in your note to the account, how you'll be able to classify these things into a direct tax and then indirect tax is what the examiner will seek to know from you. Then when you come down, we have taxes on domestic goods and services. Taxes on domestic goods and services. Obviously, these are going to be the indirect taxes. You see excise duties, petroleum duties, energy fund levy, and VAT itself. VAT domestic, VAT external. Then other forms of indirect taxes. Then we have taxes on international trade. So these are the things. Then when you remember when we were doing the sources of revenue to central government, we did tax revenue. After tax revenue, we also did all these examples we're giving, non-tax revenue. So the major classification of government revenue are one, tax revenue, and then non-tax revenue. So what are the non-tax revenue? Retention, and them where we have lodgement, fees, and charges. You should be familiar with these examples. Dividend and interest on profits, dividend interest on profit from oil. So all these are the non-tax revenue. And like I mentioned, sometimes they'll go to the website and pick the things as it is, or what is happening practically. Then add a student touch or an examinable touch to it. Something very simple, but this is what they are doing practically on the field or in office. Then other types of revenue was looked at. Other ESLA proceeds, energy, public lighting levy, and then a whole lot. Then we also look at this grants, grants and donations. Grants and donations. So everything we are going to do, or the theory, practical aspect we are going to look at, will fall under these things. Then the gift mix classification. The gift mix classification. So we get a total revenue here. Then let's go and look at the gift mix classification of expenditure. Look at it. This is something I think we did last week or so compensation of employees, all the items and the compensation of employees, what are they? Wages and salary, social contribution, pension, gratuity, social security. When you see these things, you know where to classify them to. The use of goods and services, non-annual budget funding amounts, then annual budget funding amount, interest, yes, interest payments. When we are doing cash flow, some of these things, you see them more often, domestic interest, and then external subsidies. So just pay attention to the major headings, compensation of employees, sorry, what are the things that come under them? Use of goods and services. Here, there are a lot of things that will fall here. As you saw in the example we solved yesterday, the interest payments, then subsidies, utility companies, a whole lot, grant and other. Now, one thing about grant is that sometimes it can either be both a revenue as government receiving grants, and it can also be an expenditure as government giving out grants to either its affiliate institutions or external institutions. So other expenditure, grants and other government units. So National Health Insurance Fund, Get Fund, Road Fund, Energy Fund, and a whole lot. Then we have social benefits. Sometimes social benefits, if you're not very careful, you confuse social benefits with compensation. So if you go to the previous lecture or video and notice the difference in there. So some example of social benefits are lifeline, consumer of electricity, and then LEAP. We discussed this LEAP, livelihood empowerment, something. So that's the LEAP. It's basically some assistance for the aged and the poor. The other expenditure. So that is how a typical classification of government revenue and expenditure looks like. All right. So let's continue. Please, can you, I'm sharing a different screen. Can you see my screen? Hello, are you
Yes,
there?
sir.
Okay, so somebody should read the example too. Who is reading for us? It's going to be like this going forward, but it will be worth it. I know I'm disrupting your sleep, but it will be worth it. So who will read for us?
Please, I'll read.
Okay.
Example 2. The
Yeah.
trial balance below relates to the consolidated fund for the year ended 31st December 2017. The indirect tax, direct tax, non-tax revenue, compensation for employees. Goods and services, consumption office consumption. Loans and advances, bank and cash balance, equity investment, domestic debt, external debt, trust fund, sundry creditors, other expenditure, public debt interest, social benefit, grants, subsidies, accumulated fund. Required. Prepare statement of revenue and expenditure for the consolidated fund for the year ended 31st December 2017. B. Prepare statement of financial position as at 31st December 2017.
Yes. Thank you. So When you have a question like this, sometimes in the exams, what gets some students confused is the here. I mean, you see that this thing they've done it into both like a trial balance, debits and credits. Some students over the years having found out that they don't know how to differentiate between an item that will constitute revenue, an item that constitutes expenditure, an item that constitutes expense. So what they do is that they end up bringing an item that is an asset into statement of financial performance. Now, when you do that, and the examiner finds out, the only explanation is that the student didn't learn or the student didn't prepare, but just want to find a way to escape. Okay. So in this question, if you look at the question, what will be the approach? What will be the first thing that you will do? Can someone tell me?
You have to do your chart of accounts.
Okay, you have to do your chart of accounts. How do you do your chart of account, please?
So this one, we will start with our revenues.
We start with our revenue. Okay. Then when we start with our revenue, what are the items under our revenue?
Direct, indirect, non-tax revenue.
Yes, yes, yes. You are getting the concept. So please, to give you a check, when you have a question like this, at any moment in time, we know that the double entry is telling us that all revenue, anything that is a revenue, will have a credit balance. So revenue items, you should see them at the credit side. And then liabilities and then equity or capital all have credit balances. So for example, if I see revenue, I know that revenue, or if I see at the credit side, I know this is a revenue. My revenue will not be in the balance sheet. However, the net effect of my revenue, which will be my equity, is that will be going to the balance sheet or statement of financial position. Then we also know that all expenses and then assets have debit balances. Expenses and assets, and then losses. So income, gains, profits have credit balances. Expenses, assets, and losses have debit balances. So if we check this, look at this. Accumulated fund. Have you seen this? This accumulated fund. This is like income surplus from the previous year. But it is at the debit side, which is telling you that we have been to this account. The trial balance is for the end of 31st December 2017. However, when you check from 21st December 2014, they have a debit side, meaning they made a loss. So when you are done with everything and you are opening your income statement account or your accumulated fund account, know where to put this. these are some tricks. Okay, so um, let's continue. Let me stop share in the first place. Then open our whiteboard. And open our whiteboard. Okay, please. A few minutes. Okay, please, I'm sharing two screens at the same time. I hope you can see. Hello, please, are you there?
Yes, sir. It's just one screen that is showing
Which one? Which one is showing?
the question.
Only the question is showing. Okay,
Yes, sir.
let me. Can you now see two screens, the board and then the question?
Yes, sir.
Okay, all right. So in this question, we've been asked to prepare. The requirement of the question is that prepare a statement of revenue and expenditure for the consolidated fund. So please, when we will do more about preparing accounts for the public sector. We have accounts prepared for central government, and then accounts prepared for an MDA, MMDA, and the institutions. So they can either test you on how to prepare accounts for central government. By that, we mean the consolidated fund, or for a public institution, let's say a school, a university, a hospital, or an MMDA. In all these instances, the revenue streams sometimes are different. So because we are asked to prepare revenue and expenditure for the consolidated fund, you see some things like taxes and the indirect taxes. But if you are preparing an account for, let's say, a school, let's say a university, UPSC, or a hospital, or you are preparing an account for like a Dekotopon Municipal Assembly, you will not see something like indirect tax or direct tax as part of the revenue stream, because that's not central government. So take note in the question, which one are you being asked to prepare the account for? Is it a central government account? So this one is, they are preparing an account for revenue expenditure for the consolidated fund. So what we will see, we will have our heading here like this, GOG. GOG means Government of Ghana. In the exams, you might want to write it in full. Then statement of revenue and expenditure for the year ended 31st December 2017. For the year ended 31st December 2017. You have to see the signs here. Then, like our dear sister said, you go on to your revenue. If we look at the question, what are the two items constituting our revenue? In fact, we are doing known to unknown. This one is very simple and it doesn't have plenty or even any, not plenty, it doesn't have any additional information. In fact, we are doing known to unknown. When we pick a full question with plenty additional information, you realize that that is going to be more. So we are doing the more simplest one before we look at complex scenarios. So please, in this question, what are the revenue streams here? Our dear sister mentioned, what are they?
Direct and indirect taxes.
All right. So we will have our direct tax here. How much is it?
$85,000.
85,000. Okay. And then we also have our indirect tax here, which is
120,300.
120,300. What other revenue stream will we have? What other revenue stream do we have?
Yeah. Non-tax revenue.
Yes, non-tax revenue. Non-tax revenue. non-tax revenue. Which is how much?
60,000.
60,000. All right. So we can have our total revenue of how much? This and this will be 180,100. So 180 plus 85. Please point your calculators. 8265 300. Is that correct?
Yes, 265,300.
All right. So our expenditure. So in exams, when you hear prepare statement of financial performance, this is what they are asking. They are asking you to prepare. You have your revenue, you have your expenditure. You go and look for the items that constitute revenue. They are, you check. Sometimes you see if it is for an MMD, you see things like IGF and all those kind of things, or government of Ghana subvention. Okay. So what are the expenditure items here? Who can tell me one? Here it is very straightforward.
Compensation for employees.
Compensation. This one has no nose, so it's very simple. Compensation is how much?
76,000.
76,000. And then what again do we have?
Goods and services.
And services. And that's how much?
45,000.
45,000. Okay. What's the next item?
Consumption of fixed consumption.
Yes, consumption of fixed capital. Consumption of fixed capital. Consumption of fixed capital is just depreciation. So don't be confused. Okay.
Okay.
So consumption of fixed capital. How much is it?
24,000.
24,000. What else do we have there?
The loans and advances.
Loans and advances. You think it will come here?
No. Other expenditures.
Other expenditures. Yes, you are correct. But before then, look in the, let the other expenses be the last one. Before then, okay, let me count down. I think, let me count down. Look, this one, public debt interest.
Okay.
Social benefits.
Benefits.
Subsidy. All these are classification of expenditure by the gift so. Because are you getting it?
Yes, sir.
All right. So in order of this, normally public debt interest. Public debt interest. How much is it?
33,000.
33,000. Then we also have social benefits, SB. Social benefits, which is 20,000.
12,000.
12,000. Okay, sorry.
Yes, sir. Yeah.
SB. 12,000. And what's the last one? Subsidies. You've seen that?
Subsidies.
Yes.
Yes.
Subsidies is how much? 12,000.
12,000.
Okay. So now we are good to underline and then add everything. In the exam, sometimes when you are doing it, as you do, then you take to give you an idea that of the things you've tackled and those left. It will even help you to know that, oh, okay, the remaining items will go to balance sheet, or those I haven't take yet will go to balance sheet. So if you take all this, we are left one thing. Look
Well,
at
I would
this.
other
Grant and then the other expenses.
other
Yes.
expenses.
So you see, because of the taking, we are able to know that there's something we haven't done here. So let's go back. Grant. Grant is how much? 20,000.
20,000.
And then other expenses. That's how much? That one is also
20,000.
20,000.
Yes.
Okay. So now let's add everything. Now, if we are able to take, then we know those that we haven't tackled. It means those we haven't tackled will go to balance sheet, or they are balance sheet items. So let's begin to add. Let me maximize it. There's it. What will be our total expenditure? You may add
242,000.
200 and
42,000.
242,000. Okay. Let's take it from our total revenue. So you have our total revenue here. So let's take that from our total revenue.
Level 23,300. 300.
23,300. Okay. What figure do you call this? What figure will you give me? Surplus, isn't it?
Surplus. Yes.
Surplus. Now, after you are done with this, in the question, we were told that they have accumulated fund of what? 216,000. Have you seen it? This one.
Yes.
So we are going to open a surplus account. We are going to open a surplus account. This surplus account is an account we are going to use to handle the equity of that central government before we take it to balance sheet. So we will come here like this. We'll say in the public sector, they call it accumulated fund. So we can say accumulated fund accounts. Accumulated fund accounts. Now, don't forget, I said because this one, accumulated fund at default should have a credit balance. So if it is at the debit side, that means in the previous years, they made a loss. They made a loss. So we'll say balance brought forward. Because it's at the debit side. 216, 300. Then for the current year, they made a profit. Then we say that one will bring it to the credit side as it is. Profit for the year. Profit for the year. And that's how much? Profit for the year is
23,300.
23,300. So it means that we are still going to have a profit that is in the negative to be carried forward to the previous or the current year. So 216, 300, 216. Once our balance carried down will be here, and our balance brought down comes here, then it means the company, or sorry, that government institution is still making losses. So how much would that be? What's the difference?
193,000.
Flat.
Flat. Yes, sir.
Flat figure. Okay. All right. Then we bring it here. 193,000. So this figure, we will take it to the balance sheet or statement of financial performance as part of their equity. Now, it means that we have dealt with this one too. We have dealt with this one. So anything I haven't taken is something that will go to balance sheet. I haven't taken this. I haven't taken this. Look, what will this one tell you? Loans and advances. What does it tell you? Look at the position. It is at the debit side of the trial balance.
Yes.
So it's what? Loans and
Yeah.
I'm listening.
Sir, that would be
The
yeah,
loans
loans.
and advances is at the debit side of trial balance. So what is it? And we all know now we have exhausted all the items in the income statement or revenue and expenditure. And we are told that anything we haven't taken will now go to the balance sheet. And I'm asking that the loans, advances you are seeing there, what is it? Yes. You go and see it somewhere. Statement of financial position. As at 31 December 17. Okay, let's have our two CD signs. Or even primitive. So in a if it is financial reporting, you have written non-current assets, then you have PPE, isn't it?
Yes.
So here in the public sector, the PPE element, we call it non-financial asset. Non-financial asset. Non-financial asset. If you check the trial balance, let's go and check the trial balance. There was no, any item of PPE in there. If you check, so see, the items I asked you about, if loans and advances is at the debit side, that means it's an asset. So this one is an asset. Bank and cash, that one I know, it's also an asset. Equity investment is at the debit side, is also an asset. Are you getting how the thing is going?
Yes.
These are all assets. Then when you check here, those are the credit side. All liabilities have credit balances. So domestic debt, external debts, trust fund, sundry creditors will be liabilities. Okay. So non-financial asset is going to be nil because they don't have anything like, building, motor vehicles, none of them is set in the trial balance. So if you have certain things, I'm saying that it counts as a non-financial asset. That is how it is called in the public sector. Since we have none, let's go on to the financial assets. Financial asset. Here we are going to have a lot. So all the items listed there. The first one is what? Loans, right?
Loans. Yes.
Loans and advances.
Advances.
So sometimes check the position of the items in the trial balance. That will tell you whether it's an asset or a liability, expense, or revenue. Okay, loans and advances is how much?
30,000.
30,000. Loans and advances. What was the next asset item?
That's bank and cash balance.
Yes, bank and cash balances. Bank and cash. How much?
That's 12,000.
12,000. Then we have what? Equity investment, isn't it?
Yes, sir.
Equity investment. Equity investment. That is also 40,000. 40,000. So what will be the total? This and this is 42.
82,000.
82,000. Okay. It means that is all our assets for now. Per the question. Per the question. That is all our assets. So we are going to have our total assets. Total assets. Now, the next leg of our statement of financial position will be fund balances and liabilities. This will take care of the equity side and then any liabilities, fund balances and liability. Okay, fund balances and liabilities. The first one will be the fund balance, the one we open the T account for. Fund balance. This is more or less like you see income surplus in the private sector. So we had it at the top here. It's here.
Yes.
Negative 193,000. Have you seen it?
93. Yes, sir.
Negative 193. So we'll put it here in brackets. Negative 193. Negative 193,000. Then, obviously, the rest, the liabilities will come. So if we have our fund balance, let's now have our liabilities. So we will have, let's have a simple heading like this. Liabilities. Then we go to the question and go and look for those liabilities. So here, our focus and then attention is going to be at those items we haven't taken. That is at the credit side of the trial balance. That's where our focus is going to be. The items in the trial balance that we haven't taken now, that is at the credit side. So by extension, we are going to take this because we've done it. We are going to take this. We are going to take this. So look, all the items here are the items left we haven't taken, which is going to be our liabilities. So mention them for me. The first one is what?
Domestic debt.
Domestic debt. How much is it?
90,500.
90,500. Next,
External debt.
domestic debt should be DD. External debt, ED. It's 110,000. 110,000. What's the next one? Trust fund,
Trust fund.
TF. Trust fund is 50,000, right?
Yes.
Trust fund is 50,000. Then we have sundry creditors. Sundry creditors, SC. That is 24,500. Okay. So please let's add Everything. Let's add everything. And whatever we get should give us 82,000. Else, you are wrong or we are wrong. Minus 193,000, then 90,500, then 110,000. Say again,
82,000.
82,000.
82,000.
Okay. 82,000 flats. It means our balance sheet agrees. All right. So here the focus should be how you know the classification, I mean the items. If the question has PPE, after taking all your depreciation, how you are able to know that this one, oh, it's a non-financial asset. Then financial asset. In fact, in essence, they can even ask you for the theory aspect for you to define financial asset and then give 3 examples. So financial assets, loans and advances, bank and cash, equity investment. Yes, these are all financial assets. Okay, so that is that for everything we've been doing. All right, so let me get these things. Then we will look at, I know we might not finish, but we are going to look at
So please a question.
go ahead, please.
Are there cases where the grant has a credit balance?
Aha, that's a good question. If the grant has a credit balance, it means government is a revenue. It means government has received grants, let's say from American government, German government. Are you getting me?
Yes, sir.
Yes. So if the grant has, like I mentioned when I began, that sometimes grant can be a revenue and at the same time it can be an expenditure. So if you're on the credit side, per double entry principle, all incomes, gains, profits have credit balance. So if grant shows at the credit side, that means government has received revenue. Yes, I think that's a good question you asked. That's a good question. Um, a minute. Let me check. Uh-huh. All right. I'm sharing a new screen. Can you see it?
Yes, sir.
This is a standard loaded question. So I began with the most simplest one or the known one. Then we move to the more difficult one. So that was going to give us an idea of what is to come. So somebody should read the question. When you get to the trial balance, just read the items. Don't mention the figures.
Okay. So we have below are the transactions of the consolidated fund for the year ended 31st December 2018.
So This one, they are going to ask us to prefer account for what? Central government, not an MMD, let's say a district assembly, a metropolitan, or not a public sector institutions like a hospital or a trading college or a university. Go ahead. Please go ahead. Hello, I can't hear you.
So we have taxes paid by individuals.
We are going to discuss it one after the other. If we are not able to solve it next week, it will be the first question we solve before we do anything. Taxes paid by individual. That is at the credit side, isn't it? And that is a revenue. Do you agree with me?
Yes, sir.
Okay. Next.
Taxes paid by companies.
Next.
Other direct taxes.
So look at this one. The first three, they are drawing our attention for us to classify them into what? Direct taxes. So when you are come to solve and you have your revenue, then the examiner is trying to tell you that under your revenue, you want to see a classification of direct tax. And you should know that taxes paid by individual and companies are direct taxes. Then here specifically, they told you other direct taxes. Please continue.
We have excises. Tax on goods and services. Tax on exports. Program grants.
So
project grants.
Okay, go ahead.
We have district development, property income.
So look at this. So what can you say about this one from here up to here? 1, 2, 3. These are indirect taxes. Have you seen that?
Yes, sir.
In the first example we saw, they had given us indirect taxes straightforward. You didn't have to do anything. So the examiner will be checking your notes to the account. When you're preparing the account, you have note 1, note 2. So your classification, they will look at your workings, how you have been able to classify it. So you know that the first three are direct taxes.
Right.
Okay, please continue.
We have
program grant. Look at the question you asked. Have you seen program grant and what? Project grant. They are the credit side. So this will tell you that under your revenue, you are going to have grant as a revenue. Please continue.
Okay. So we have district development, property income, sale of goods and services.
Sale of goods and services.
We have fines, penalties, and forfeitures. We have established position, non-established position.
Okay.
We have allowance.
Okay. Let me take you back a bit. Look at this one. Sales of goods and services. Sales of goods and services. 1, 2. They are all at the credit side, isn't it?
Yes, sir.
And then this one. Have you seen it?
Yes.
Where will you classify these 3 items? Let me go over again. Property income, sales of goods and services, fines, penalties, and forfeitures. So these three items from here to here. How are you going to classify it? They are all at the credit side. So obviously it is
Yes.
a revenue, isn't it?
A revenue. Yes.
But what classification will you give to it? Yabo, are you there?
Say other taxes.
Yes. Oh, non-tax revenue.
Non-tax.
Hey,
Yes, non-tax revenue. So they are three: property income, sales of goods and services, fees, fines, and forfeiture. So if you check the lecture notes or the video, all these things, examples are stated there. These ones are not in effect taxes that are imposed on the people, but they are non-tax revenue. All right. So please continue. You were mentioning established position, non-established. Yes. Now let's move from credit to debit. As we are discussing next week, when we meet, the moment we meet, we are just solving. There's not going to be any explanation. And if you care to have enough time, you can try solving it on your own so that when we meet next week, as I mentioned the figures, you have them already. Because as I'm doing this, I'm discussing it. So if you have time, I know we are all busy, we are workers and doing a lot of things. But if in the course of the week or even today, you can try your hands on them. Okay. So established post, non-established post, allowances, 13% SSF. Look at this. Established post, 1, non-established post, 2, allowances. We all know that this is what expense because it's at the debit side, isn't it?
Yes.
What will be the classification of this expense?
Employee benefits.
Say again.
Is it
Yes.
employee benefits?
But what is the classification? What is the GIFMIS classification of these expenditures, i.e., established position, non-established position, allowances?
Compensations.
Yes, compensation. Please. They are going to test you on these things. So. All right. Now they are the debit side, but we have 13% SSF. Look at where it is. It's at the credit side. What does it mean? It means they are owing Senate of 7,195. So this is a liability. If we check the position, this one, when you go and check the items under compensation, 13% SSF is part. But look at the position. The examiner just want to confuse students. Or you know that, oh, somebody knows that 13% SSF is part of compensation. But it is showing at the credit side, which means it is a liability. Which means it is a liability. So you don't have to add it here in your income statement or your statement of financial performance or statement of revenue and expenditure. The position should tell you that this is a liability. Okay, continue. The next one is what?
Utilities. General cleaning. Rentals. Travel and transport. Training, seminar, and conference. We have consultancies. Materials and consumables.
It's okay. So look at what I have done. From utilities. From utilities up to materials and consumable. That is an expense. I mean, everything here is either an expense or an asset or a loss. So those items I have circled like this. what classification will it be? What classification of expenditure will it be? Please, it means majority of you have
Goods.
not
This
checked. Uh-huh.
this should be under goods and services.
Yes, goods and services. Please, is it that you haven't prepared notes on the lecture, or you know, but you don't want to say it because it is early morning, because today is Sunday, you want to keep the Holy Spirit alive? Which one? Uh-huh. So that is goods and services. So you see, sometimes the examiner is even trying to be nice. They didn't split them across. You can trace that from utilities down up to materials and consumables are all goods and services. Okay, continue. Social,
Yeah. Social benefits.
and then what? Capitation grant
Yep.
subsidies. So these two will also fall under social benefits. So that is another classification of expenditure. Continue from fertilizer subsidy.
Fertilizer subsidy, school subsidy, utility subsidy.
Utility subsidy, yes. So this one will fall under what? Subsidy. Subsidy is also another heading or classification of expenditure. So please, that topic, government revenue and expenditure, it's not for anything that you treated it. It will come in the exams and they want to know whether you know how to classify them. Now, even if you mess them up and you get your surplus correct, I mean, everything was messed up, but your surplus figure was correct, you are going to lose marks for misclassification. Yes. What it tells the examiner is that you don't know the 2019 chart of account by the Controller and Accountant General. Okay. Then look at this. Other expenditure will also be a separate item. Other expenditure, isn't it? And then look at here. Consumption of plant and equipment. Look at the position. It is where? At the credit side. This one, you are all doing FR. If it is at the credit side, what does it mean? This one is basically depreciation. This is what they mean is depreciation. But look at the position of the figure. This is depreciation. This is depreciation. The position of the figure is telling us this is what? Accumulated depreciation. Accumulated depreciation. So in this question, it means as we go on, there are some non-financial assets or non-current assets that the question will ask us to calculate for depreciation. Now, when you have accumulated depreciation simply means they are the previous depreciation from the previous years. So anything depreciation we calculate for the current year, we will just add it to this accumulated depreciation. And then take the total value that we get from the cost of the asset. But the current year's depreciation is what will go to the current expenditure. So consumption of fixed assets depreciation will be the current year. But in the balance sheet, it's going to be this accumulated plus the current year. Then the figure we'll get, we'll subtract everything from the cost of the asset. I see some cost here, cost of assets down here. Let's continue. When we begin to solve, probably next week, we have about 11 minutes to end the class. When we begin to solve next week, we will understand. So next week when I come, I'm not going to do any explanation. The moment we pick it, we are solving, because even as we are doing this, we are solving it in effect. Okay, so consumption of fixed plant and equipment. This is accumulated depreciation. Now look at this one. Get fund. Get fund. This is assembly common fund. Who can tell me what that one is?
District Assembly Common.
Yes, and then the debt fund. So they are the debit side. Say again.
Government subventions to the district.
Yes, so they are payment or expenditure. Thank you. You are correct. So look at these two. Get fund and then district assembly common fund. They are government subvention. So it's like government made payment to the assemblies. So it is an expenditure. You see, it is very good for us to know the position of all the figures in the trial balance. Hey, this one is it an asset? Is it a liability? Is it an expense? Is it an income? Is it a revenue? Is it a loss? So we are correct. Government subvention to the assembly. So government made payments. So these are statutory payments. Okay, let's continue. Look at this. Trust monies. It's at the credit side. What does it mean? Trust money. It's at the credit side. See, trust money is like somebody has given you money to keep for the person. Is it for you?
No.
So, and it's at the credit side. It means this is a liability. Trust monies are like monies, let's say, Senate, Social Security, and National Insurance Trust. The money we are paying towards our retirement and government is keeping. It's not for the government, it's for us. So if government has it in his books, it is a liability because in future, government will have to pay it to us. So the position is at the credit side. It's a liability. Okay, let's continue. Cash and cash equivalent. Who can tell me from here to here? From here up to here is what? Yeah, but what is it? 1, 2, 3, 4. 1, 2, 3, 4. It's what? Look at the position.
Expenditure.
Look at the items again. Cash from cash and cash equivalent, loans, equity investment, and advances. Don't forget, the double entry says that assets and liabilities, assets and expenses have debit balances. So the items we are seeing from cash and cash equivalent to advances are assets. They are government assets, but they are the debit side. Do you agree with me?
Yes.
Yes. So here, the loans you see here that it means government has given out loans, staff loans. If you check the previous example we saw, was it loans and advances or something? So these are loans to government workers that is due to the state. So it's an asset to the government. Equity investment, government have invested in private or other companies. Advances, so loans and advances always go together. So all these are assets. And this will tell us when we begin solving those items that will go to balance sheet, those that will go to. So some people, meanwhile, when I was in school, what I do is that as I'm doing, when I do this, then I'll write BS. BS will tell me that balance sheet. Then I'll come here, I'll write BS. BS will tell me balance sheet. Then I'll come here to I'll write BS. So if I begin solving the question in order, I know which items to tackle in statement of financial performance or revenue and expenditure. So when I'm done, I come to look at all those with BS because I know they are going to balance sheet. The exams we are going to write. Sometimes it's not about you being a shark or you being known. It's about strategy. It's about strategy. Some people, your trial balance doesn't, your balance sheet must not balance. But once you are able to spot certain items and you know where they will appear, even if you are behind time, you just write statement of financial position, blah, 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 as at this. Then you write financial asset. Financial assets. You come and list all these items there, non-financial items, because you are out of time. You know where the items will be. Okay, let's continue. Look at this one. Domestic loans, external loans. Where will they go? Yeah, boy. They are the credit side. Yeah, but where would they go? Domestic loans, external loans. This one there is Coco. We have to know it. Yes.
The liabilities.
Yes, liabilities. This one will go to balance sheet. It's a liability item. Please, next week, this question, I want you to print it down. I don't like using that half screen. I don't like it. So let's all print it down. So when we come, I'll have the screen to myself. They will be solving. I have it already. I have printed way back, like, let me say 4 years or 5 years ago. So print this question down. Next week, when we come, I'm not going to share the half screen. It's inconvenient for me. So we have the whole screen. Then we begin to solve. All right, so these are liabilities. Then look at this. Look at the question we solved. Accumulated fund. Maxwell, did you see the first question we solved?
Yes, sir.
You realize that the accumulated fund was at the debit side. Now, accumulated fund for the previous year should ideally be like an income surplus. If they really made an income from the previous year, it should have been here. But when you see it at the debit side, it means they made a loss. When you see it at the debit side, it means it's a loss. So the previous example we saw, when we are done doing our revenue and expenditure, the difference we'll get, this one is already minus. So take note. Then the remaining items are what? Non-financial assets. This one, building at cost, transportation equipment at cost, plant and equipment at cost. So all these three items are non-financial assets. And we are going to, the question will ask us to calculate depreciation on them. So look at additional information. This question, work in progress, computer software at cost. So these are additional assets for us to look at, to look like. Okay, additional information. We have 3 minutes more. Don't worry, we will close exactly 6:30. Additional information. The Controller and Accountant General uses modified accrual accounting concept in preparation of final account. Yes, here they are just telling us that we are not going to use cash based of accounting, but we are going to use what? Accrual or modified accrual. Established post salaries of this was outstanding as at 31st December 2018. Yes, here, this figure, they are saying is outstanding. Outstanding means accrual or owings, their liability. This figure will go to balance sheet or statement of financial position as a current liability. Then we will add this figure, established post salaries of this was outstanding. If it's outstanding, add it to the current year because we are doing accrual. So we will come here. Where is established post? Established position. We will add that figure you see down here. This one. I mean, in the statement of financial performance, we will add it to this. So when we come to compensation of employees, it will be this plus this plus this plus what is outstanding or what is owing, this one. But this figure alone will go to balance sheet as a current liability. Okay. Interest on domestic and external loans are provided for as this and this, respectively. Yes, interest on loan is an expense. It's straightforward. Expenditure. Then we are given depreciation. We are being asked to depreciate the following assets. Building, 50 years. So we are going to use straight line. Straight line divided by the number of years. Plant, machinery, furniture, and fitting, 20 years. Transport equipment, 7 years. Computer software, 5 years. It's very straightforward. And there's some provisions here. Specific provision for bad debt is made for loans receivable and investment, as and when their non-recoverability is determined, and where a request is made for a write-off to Parliament. This provision is set at 3% and 5% respectively. Now, The provisions will be on what? Loans, provision for budget is made for loans, receivables, and investment. So the 3% is for loans, and the 5% is for what? Investment. When we go to the question, we have loans here. This is a loan. Receivable is an asset. It's a loan receivable from employees to government. So this is an asset. We are going to make a provision for this. Then on investment. All right. What are the requirements? They are saying we should prepare a statement of financial performance, like I mentioned. They're just going to do revenue and expenditure. That's what they mean. The question will not say prepare statement of revenue and expenditure, but statement of what? Financial performance. For 10 marks, you see, prepare statement of financial position. Then we are asked to state accounting policies that are usually accompanies consolidated financial. So the accounting policies, some of them are what? Preparing the financial statement on accrual basis. It's an accounting policy. It's an accounting policy on an accrual basis. So that is that for, we will solve this question next week. It will be the first thing, the first question we solve. After we finish solving, then we continue with gift mix classification. No, the gift mix platform. The last time we were looking at what the gift mix is used for. So we'll continue with the gift mix. Please, any question for me? Any question?
No, sir.
Okay. In the absence of no question, I thank you for coming. See you next week.
Thank you, sir.